Hi and welcome to the very last episode of Trading Tips with Jim before the summer. Next episode will be out in August, and in this week's episode I will give a short summary of the things I said during the first half of the year. I will let you into some of my trades. We will of course have a look at the $1,000 challenge. Where are we now? What am I doing there? And what will I do during the summer holiday? And I will answer one question that one user sent me on my private mail. Did you, Jim, really invest into American Airlines and Dollar General? I will show you the trades.
Tick-tock goes the market clock. Bulls run wild, bears don't talk. Up or down, it's a coin flip game. Buy low, sell high, don't lose your grip. Stay sharp, stay fast on this trading trip. It's trading tips with Jim. Win or learn, never gim. Stack your knowledge to the brim. Tune in now, let's begin.
Last week I said that market can easily go up, can easily go down. It will be so natural for markets to have a correction, and I was betting actually that market will have a correction. I have reduced my portfolio exposure, or the exposure in the market, rebalancing a little bit, but Nasdaq is unstoppable. Still Friday, and Nasdaq is up 2.37% so far this week, even before markets have opened. Dow Jones is up 0.76 and S&P 500 is up more than 1%. All, of course, driven by the major companies. And many ask, so how can it be that market can just continue upwards? Because you feel the personal strain on your economy. We have come from 5 years of incredible inflation. Last year was actually a reduction in inflation. Now it's on a slight uptick again, currently around 3%, 3.5%. Inflation driven by the high oil price lately. But 5 years of superinflation, markets were fueled with money during COVID, and with some logistic challenges, it was doomed to be inflation. Anyone listening to this podcast knew it before it happened, because I told you it would happen. And since we already talk about that, I have been saying that I believe we will go into a period of deflation, and I think prices will drop very hard. I'll give you the two arguments why, if you haven't heard it before. First off, I think oil will fall to $40 before end of summer, like let's say end of August. Oil will be at $40. Currently oil is at 90 after falling from 109 last week, down 90% over the week, and I think oil will ramble down, but it all of course depends how Iran will be solved. I may be wrong here, but that's my bet. You can hold it against me. And 2 years ago I said that oil will go down with the new government in US. Oil will go down, inflation will go down, and such happened. And now oil has been pushing inflation up. With oil going down, inflation will continue down. Yes, it is at 3.5%. The new Fed chairman is just taken over. He will have a tough job. Kevin Walsh is his name. He will have a tough job, because now he'll have to weigh out against politics, against everything, and inflation is right now on an uptick. They will have to deal with it. Will it mean increase in interest rates? My opinion is that if we look away from Europe, US should see decrease in interest rates moving forward, but it might be that we will have one to stagnate the inflation. Depends how fast the oil will go down. So far it seems like there will be a 2-month peace truce between US and Iran that should keep pushing the oil down, but only a fixed solution will make sure that it will drop hard. And so we get oil to get down, prices of goods produced. So much is dependent on oil as energy, as an item in products, etc. If oil goes down, which I believe, that should reduce inflation. Another thing that people do not understand properly is how much AI will revolutionize, and already do, revolutionize the industries. Goods, and here we talk about software goods, we talk about a lot of other goods, are being developed much cheaper, meaning that some price at some place we will see big companies starting to fight for customers with price. That is my bet. Profit margins are very high. They will do what they have to do to get customer, because that's how it is. Like, look at AI right now, like OpenAI and Anthropic, they are subsidizing your use. If you, for instance, use AI for coding, etc., a lot of this is subsidized. They lose money, but they want you as a customer. Anyway, things are being built. Businesses are getting 10 times more efficient. We see Microsoft is slashing, we see Amazon is slashing employees. There will be a lot of unemployed. When there is a lot of unemployed people, that will mean there will be available work resource. And usually that means when you have a surplus of something, well, they have to sell them a little cheaper. This combination of super efficiency due to AI and lower oil prices are the two main arguments why I think we will get into deflation. Will I be correct? We'll have to see. Oil $40 by end of August. You can hold it against me. Said the same thing last podcast. Anyway, these things brew for lower prices, and that may or may not be as good for some stocks. What it will be good for is in my world consumer-related items. I think these will do very good. While we now see huge company like NVIDIA, Dell, for instance, who put out the best quarter you can imagine, and they rose more than 40% in after trading yesterday. All of these companies, they will have a problem defending their whole big valuation. Some argue this will lead to like the web bubble in 2000 and the bank crisis 2008 will lead to a huge fall when this AI bubble will burst. I'm not sure it will be a bubble as such. I think we will have to have a correction. I think that right now it's there is not enough chips, there is not enough of different things, computing power, a lot of things. Putting a pressure, and when there is a pressure you can increase your prices, but at the same time gigawatt factories are being built out. Tesla is one of these things. These things are being built out, suddenly there will be a surplus in the market, and then you cannot take the same prices, which means to me, for instance, a company like NVIDIA currently at $214 seems to me to be at maybe where it should be and shouldn't go much higher, and this goes for a lot of companies. I have shifted into consumer items a lot. I've gone out of many of the good stocks, and I have lost an upside because some of them have been continuing upwards. I've lost some of it, but I wanted to reduce my overall risk. And that means, for instance, I invested into a company like Dollar General. I told you long before I did, Dollar General were at 145, and I said I will now start to buy Dollar General. I never buy everything in once. Usually I buy in 3 steps. That's how I do it. And believe it or not, I was able to get Dollar General for an average of 102. First buy is actually as high as $142. The first buy, then Dollar General just kept going downwards, and I used the chance to buy more, and I bought the last very cheap, giving me an average of $102.94, as you should see on the video if you are watching the video version of this podcast. Currently, Dollar General is up at $109.53, giving me a profit of 6.4%, but I am in it for the longer run when it comes to Dollar General. And to Peter, you were the one that asked, did I really invest into these companies and American Airlines, etc. I started to talk about American Airlines when it was $14.32. You can just go back to the podcast where I said I will start to invest into American Airlines. American Airlines continued downwards, I think it was even down to $9.60. Anyway, I bought 3 times, as I do all the time. Not always like three amounts. I set aside an amount which I want to invest. Sometimes I increase it or I decrease it during this buying period. I might buy a little on the very first, then more on the second, and little on the third. It may all depend how I see things. And American Airlines, I was super lucky to get a very good average of $10.68. This can also be seen on the video if you're watching the video version. Currently, American Airlines is at $14.75, giving me a profit of $38.11%. So Dollar General has so far given me 6.4% and American Airlines 38.11%, but none of them are sold, so it's just still profits. But these are two companies which I still think are very undervalued, and I believe American Airlines should double, go up to 20. I bought it at 10.68. I think it will go up to 20, and the Dollar General also most likely will go up 150, 160. That's where I will start to look at things. So yes, Peter, I did invest into them both. Actually, I have invested in any company that I have talked about. Starbucks, cheap bottle, they are all there. One company I also invested in, and I told you this, Tesla. If Tesla gets down to 370-ish, I will buy again after I bought and sold and then rebought again. Currently Tesla is at 442, and this may be unused, but I will be selling my Tesla shares. Even last podcast I said that Tesla is the company that will go very, very high. I believe it's one of the absolutely best companies there is, but right now I will sell my Tesla shares to take that short-term profit, because I believe markets will have a correction. Maybe things, Nasdaq, as is, I said, no resistance about 27,000 points. I can just go straight to 30, probably just will go straight to 30,000 points, but there will be a correction, and I think it will be a hard one for some companies, and somehow I see that I will be able to do yet another trade in Tesla. So I will sell my Tesla shares today. I will wait for what I consider to be a good buying point. Maybe it will happen during the summer, maybe it only will be in August, where I again will re-enter Tesla, because Tesla is a company I absolutely believe in. So this is a new one. Starbucks, $100.75 for Starbucks. Sitting in Starbucks, and will sit there, bought around 90 on Starbucks. Chip bottle, which I bought at $29, currently at $32.42. I will sit there as well. These are in my consumer part of the portfolio. In the more top risk of things, we have Iowa Technologies, which I bought 3 times and made a lot, and now it's $25.84, up 79%. Can you imagine that? Few other companies haven't done as well. I also bought Adobe, and that is still sitting with a loss. Same thing with DoorDash. I started to buy Adobe at $351. I started to buy DoorDash at $226. Buying, as I said, in 3 steps to get a lower average, but both of them is down more than 10% so far in my portfolio. Also bought dollar, told you that. I think dollar will strengthen, and dollar currently at 116. I bought at 119. Approximately was 1.21 against the euro high, and I started to buy a little at 120 and a little at 119, so the average is there somewhere. Currently at 116, roughly 3% I have made on the dollar, but it is a different type of bet. But I still believe dollar will be the one that strengthens. And if you wonder about all this, I see, and I said this before, I think it will be the best decade ever in the history of the world, especially for West, especially US. And now we will see what happens. Of course, things can change very fast, but I think US will be in a new period of extremely growth. Last GDP numbers shows exactly what I said. I think Europe will come, but they will come much later, because Europe struggle with a lot of political issues. they need to handle first, and Europe is the slowest of them all when it comes to GDP growth. There is no reason why the euro should stand very high, and if any Norwegian is listening, I hope Norway never ever will enter EU. At least as it currently is, that will lose all self-control and all the opportunities that Norway have to continue to be a wealthy country, and also for the future. Independence has a price, but we also stand to lose a thing or two, which we saw with electricity, for instance. Norway was super cheap on electricity, then we got into some deals, and now you have to pay the price for that. Anyway, the bet is on dollars, of course. I also made more bets into that Bitcoin will go up. So far, very, very wrong. It was up again, but currently Bitcoin has been falling last week down to $73,000. I been buying Bitcoins, and anyone following this podcast know that I bought around 30,000 first time and sold at 60, then bought back at 30, etc., etc. But I have recently bought higher than $73, or bought in the beginning of the year, much higher. So the trade so far this year in Bitcoin is not enough. I have enough crypto now. I'll not invest more in crypto. And to sum up these things about the portfolio and how I do it. So I've been in and out. For instance, I have a Norwegian portfolio where I am in oil freight carriers, etc., because they pay such huge dividends, and I saw the huge upside. I will still sit in them, but I have started to reduce a little. Then, but that's something I consider strong, even if, as I said, I believe oil will continue down, but I believe freight will just keep increasing. It will be a good freight rates for quite a long time. It will be a strong market, but I will slowly reduce my exposure there. When oil go down, certain things will go up. Those who are dependent on oil should go up, and American Airlines is just one of these things that if oil price go down, fuel will get cheaper. Fuel is a high cost, of course, of any company like cruise lines, etc., etc. So that's some of the reason why I'm in American Airlines as well. The main bulk of my portfolio sits in the United States, and I sold, for instance, NVIDIA at $208. Anyone following know that I did that after doing a super buy. It's super cheap. I sold everything at $208 because I thought it was way too high. Hope it would go down to 150, never went to 163, 167 or something like that, and then just push upwards. Was as high as 230, 200 and almost 40, I think, a few days ago. Currently at 214. If NVIDIA get down to 150, I will be on the buy. But I have sold out some of these tech companies, getting more into consumer, because I believe that will be the upside. If I'm correct, oil will go down and we'll get into deflation where prices actually will start to drop. Then consumer will do very, very good. In the big picture, and I have to mention this as well, inflation, there may be more reasons behind the inflation than we think. One of the things that is, especially for US and especially for EU, is the insane huge national debt. It has to be handled some way, and in previous history it has been dealt with inflation, because inflation eats up debt. I mean, you get huge GDP growth, you try to keep your debt at somewhat the same level, and anyone who bought a house 20 years ago know that when you bought it, the debt that you had was insane high. Today it is nothing. That is usually how inflation works. So there might be more reasons for inflation, just than these political things that seems to be the cause of it. I'm not sure. That's highly speculative, but if for some odd reason this has some truth in it, then we can expect inflation to remain elevated over a period of time, and then consumer will be stressed. Anyway, we have to take a guess. My guess is oil will go to 40. My guess is that consumer will be the big one. What have I not said? Now I've given a short review of the stocks that I'm in. I will be sitting in most of these stocks during the summer, during the next 2 months, where I will be offline, not giving out the podcast. I will do some restructuring because I still need to restructure my portfolios better to be prepared. I have maybe too much cash at hand right now because if there get to be a small crack, I just want to use it. And I have a hard time actually to see the exceptional good buys. I'm not that aggressive. Gold $4,567, and I believe gold will just continue downwards. Gold was one of the best trades I did over the last few years. Got out of gold too early, but I had to use them to get into Tesla and NVIDIA. Actually, I used the money I sold the gold for to buy exactly Tesla and NVIDIA when they were super down on the last, let's call it, major fall we had, and NVIDIA was $89 or $90 and brought me from that level up to 208, so happy about that. The buy and the sell signal says that 34% of all tickers are now giving buy signals. Is still not high, and if you look at the Nasdaq chart, you see that everything looks so smooth, so nice. There is no screaming warnings in Nasdaq, and that just tells me that for Nasdaq to really crack down, something extraordinary has to happen. Full-scale attack in Iran or something in Ukraine, and we can have the thing that will scare off the market. Other than that, it should probably just build slowly up until it just reaches too high levels and collapses. Nasdaq 22% buy signals, up from 18% last week. New York Stock Exchange 33, London 38, Oslo only 23. It took some hits certain places. Oil-related exchange, by the way. Frankfurt 53% buy signals, National Stock Exchange 37, and I will repeat one thing I said very often. I find several companies in Germany to be very cheap, and I will try to pick up some positions because I think they will grow. Not because Germany with the Chancellor, they have now said that they will build up Germany back to the super military power, not because of that, but in general because when things are beaten very low, usually it offers an opportunity, and Europe will come. It will come much later than US, Asia, etc. But Europe will also come back with good economies in a while. Tokyo 23% buy signals, Shenzhen 22. 10-year Treasury yield 445, falling from 454 last week. When this is high, market should go down. It's been disbalanced because this has been working every single time. There is a high correlation between the 10-year Treasury yield and how the markets develop. Lately, the market has been pushing up. 10-year Treasury yield been pushing up, but it has been, as I said, a huge AI push doing it. In the $1,000 challenge, I sit in NEO, and I've been sitting way too long in NEO, and NEO didn't have a very good week last week. Currently sitting at $5.50, making the $1,000 challenge before the holiday $3,872.32. At high, we were at 5,555, ready to split into two stocks. But I've been stubborn sitting in NEO because I see NEO with a huge upside, and I thought markets would have a correction earlier and give room for NEO. NEO typically goes up when market is red. You see NEO go up. The rest of the days when market is way too green, money is flowing to more interesting stocks, leaving NEO behind. But NEO put out a super quarter, beating analyst expectations, so the fundamentals are there. Market doesn't seem convinced at all. I will be sitting in NEO during the summer. I will not sell it. It's in the $1,000 challenge, and as I promised you, I will inform you before I do anything. So no matter what happens, even if NEO falls to $2, I will not sell NEO over the next 2 months. So when I get back to the podcast again after summer, we can continue where we left off. I started this challenge with $1,000 to show it how I would grow it with some risk stocks, etc. But we were supposed to be at 10,000 now, so we could start next year for the 100,000 race. So far, I could have bet almost anything else but NEO, which has been stuck now for half a year, maybe even more. The NEO trade, last trade in the $1,000 challenge, is up 7.84%, was bought at $5.10 when it got into the portfolio. I think that is it. Was not a very constructive podcast this week. Either been a little bit tired lately, been doing this so often, and it shows off in the views. Last week was on YouTube, the 2 channels were on YouTube, some 460 views, and Spotify only had 101 views. So total this podcast managed less than 600 views last week. And that just argues for itself. It's time to take a break from me. Even I am bored of myself. So hopefully you will have a super summer. I hope you will be back when I will be back in 2 months. And more than anything else, I hope your portfolio will be much greener when I will be back. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.